Yeah, thanks a lot. And on behalf of MK Global, I would like to thank the management of Arman Financial for giving us this opportunity to hosting the call. Um, Along with us, as we have Mr. Chandra Patel, Alok Patel, and Vivek Modi, the top management of Arman Financial. So I'll hand it over to Mr. Chandra Patel for the opening remarks, and then we should open for question and answers. Over to you, sir.
Thank you, Dignesh Bhai. Good evening, everyone. Thank you for all taking the time to discuss our financial performance for the third quarter and 9 months of FY21. We have issued a detailed press release and investor presentation for the past quarter. Hopefully, all of you have had a chance to review it. As always, I hope that all of you and your loved ones are healthy and doing well in this unprecedented times. Indian economy is picking up steam and recovering from the COVID-19 pandemic over the last few months. Generally speaking, we are seeing income-generating activities increasing in the rural areas and hope to see them resume to pre-COVID levels as the vaccine distribution picks up. We are also encouraged by RBI's announcement to harmonize the regulatory frameworks for various regulatory lenders in the microfinance space, which would stop the regulatory arbitrage among the non-NBFC MFIs, microfinance practitioners, and create a more robust industry to prevent over-leveraging by the microfinance clients and strengthen client protection principles. This is something that the NBFC MFIs have been requesting for some time now and is a welcome move. On the business front, the consolidated collection efficiency has picked up significantly from 87% in September 2020 to 92% in December 2020 and 93% in January 2021. This continuous progress on the repayment front on a month-to-month basis is encouraging and shows both the resilience and the positive intentions of our customers. I will now give a brief overview of our financial performance for the third quarter and post that touch upon collections, liquidity, and disbursements in more detail. At the end of the third quarter, our consolidated loan book stood at 720 crores, lower by 13% year-over-year, as higher repayment rates combined with lower disbursement in 9 months led to a rundown in the loan book. As you all know, being a very conservative lender, we had essentially stopped disbursement during the moratorium period and slowly started disbursement from August. In the microfinance division, we initially focused on renewal loans for our existing clients base who had completed their previous loans. This is because a lot of the credit bureau data was stale in the MSME and two-wheeler segments. We have started dispersing to all customers, although with a more stringent underwriting process. As a policy, we did not indulge in any top-up or net-off loans in any of our products to prevent evergreening of our portfolio. Loan disbursement for the quarter stood at 182 crores. The pace of disbursement is expected to reach pre-COVID level with Q1 FY22 onwards. The portfolio decline has stabilized and has started increasing. Our microfinance and MSME portfolio stood at 549 crores and 117 crores respectively at the end of Q3, lower by 7% and 12% year on year. In the urban two-wheeler segment, our performance was impacted by the decline in two-wheeler sales in the last 1 year given the challenging economic environment. However, our newly launched rural two-wheeler product has demonstrated relatively better performance, reporting a year-on-year assets under management growth of 20% to reach rupees 11 crore at the end of December. The rural two-wheeler book now constitutes approximately 20% of our total two-wheeler portfolio. Gross total income declined 16% to 48 crores due to declined portfolio and softer yields on post-COVID disbursement, coupled with lower booking of processing fees on account of lower disbursement. Similarly, our net total income decreased by 14% year-on-year at rupees 31 crores during Q3, led by rundown in the loan book. The company's continuous efforts on rationalizing operating expenses bore fruit, as OPEX declined by 5% on year-on-year to rupees 13 crore in Q3, while our cost-to-income ratio stood at 41.3% in Q3 FY2021. In keeping with our conservative approach, we strengthened our provisioning coverage by prudently recognizing provisions of rupees 15 crore during the third quarter. Further, we also took an aggressive write-off of rupees 7.04 crore in Q3 to help reduce the NPA burden of pre-COVID doubtful assets in the future. Including the additional provisions recognized during the second quarter, cumulative total provisions at the end of Q3 stood at rupees 52 crores at the consolidated level, covering approximately 7.2% of our loan book. At the standalone level, cumulative total provision stood at rupees 18 crore at the end of December 20, covering 10.6% of the total AUM, strengthening our provision coverage should help us deal with any impairment on account of COVID in the future. As a result of the higher provisioning, our net profit stood lower at rupees 2.9 crore for the third quarter. Adjusted for the higher provisioning on account of COVID-induced disruption, profit after tax would have been substantially higher. Our gross NPA and net NPA has continued to remain low and steady at 0.7% and 0.0% respectively. The NPA numbers are after considering no change in NPA recognition after 31st August in accordance with Honorable Supreme Court's order. If the Supreme Court order did not exist, gross NPA and net NPA would have been 4.1% and 0.6% respectively. In terms of capitalization, we remain adequately capitalized with consolidated debt to equity ratio of 3.1 times. Liquidity-wise, we are in a very comfortable position right now. As on December 31st, we had a cash reserves of approximately rupees 127 crores, including the undrawn CC limits. Liquidity position has improved, driven by the pickup in collections and in the incremental debt capital raised since the start of April. Further, we have also raised rupees 64 crores at attractive rates since September 20 to bolster our liquidity position. As per the RBI guidelines, the company has provided relief to distressed customers, allowing a one-time restructure. The restructuring was provided to willing MFIs and MSME customers who showed genuine distress, and an EMI reduction was feasible by increasing tenure. no moratorium or additional top-up loans were provided. As of December 31st, 2021, 5.6% of our loans, which 3.4% were 90 plus overdue, have been restructured. Now, to give you a more granular breakdown on collections, in the microfinance segment, particularly, the improvement in collections have been very encouraging, as the repayment rates have been jumped from 84% in September to 91% in December and 92% in January. In MSME, the repayment rates improved marginally from 93% in September to 95% in December and in January, while in the two-wheeler segment, the repayment rates stood stable at 96% in December and 97% in January. With the recovery in the economy and pickup in repayment rates, we now feel comfortable to gradually and carefully scale up our disbursement. Hence, going forward, we expect pre-COVID growth in disbursement from Q1 FY22 onwards. Further, to aid disbursement, the company has expanded its footprints with decision to open Haryana with 10 branches in January 21. 10 branches in Haryana in January 21. Also added 3 more branches in Rajasthan with a plan to open further 10 branches before the fiscal year end. Finally, to conclude, I would like to express my gratitude to all our stakeholders for their continued support during these difficult times. A special note of appreciation for the company's field staff and also other team members who has perseverance and untiring efforts are all the sole reason why we have been able to report steady improvements in repayment rates since June. Overall, our confidence to successfully navigate our way through this storm gets stronger every month and every quarter. I would now request the operator to open the floor for questions and answers. Thank you all.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Hello everyone. So just wanted to understand this GNPA that we have reported of 4.1%. In this, the restructured book is also included, the 3.4%, which is 90 plus overdue, or is that separate?
That would be separate.
So if there had been no restructuring, then the GNPA number would have been 7.5%, is it?
7.2 or something like that, I believe.
Around
little over 7%.
Okay, so GNPA including the restructuring is 7.2%. Okay.
Something around that. It's little over 7. Whether it's 7.2 or 3, I don't recall at this point.
Okay. And what percent of the loan book has not paid a single EMI?
So in microfinance, out of 3.2 lakh customers today, we have about 18,000 customers who have not paid us anything. So 18 divided by 320, that is about 5.6% in microfinance.
In terms of loan book, how much would that be?
That's what I'm saying. So in terms of loan book, it will be much lower. It will be slightly lower than that. So about 4% in terms of loan book.
Okay. In microfinance, it's 4% of loan book which has not paid us.
The good part is that the restructuring is showing some fruit. So out of the customers that we manage restructuring that had not paid us a single dime since this COVID thing started, about 27% paid their first installments in January. So, so I mean, 27 to 30% is what we. That's as far as I'm concerned, it's nothing to write home about. Of course, I would have preferred the number to be much higher. But remember, these are customers who did not pay you a dime for, the better part of 9 months. So getting them started is actually a good sign. So restructuring was in some way effective. The overall estimate is that this month we might manage closing at right around 40% of the restructured loans, get the repayment rate of the restructured loans.
Okay. And what has been the total write-offs in this entire financial year?
The total write-off, both the companies, on a consolidated level has been 7.04 crores, of which about 80%, about 5 crore 30 lakhs or 5 crore 80 lakhs would have been in microfinance.
So I think in this quarter it is around 3 crores, is it?
Yeah, this quarter will be 3 crores in micro.
Okay. And so what is the estimate? I think because now I think it's been some time. So now what do you expect the COVID impact in terms of credit costs on the overall, pre-COVID book that we have?
So it will definitely be in the single digits. But that being said, I don't want to give a percentage, Amit, but probably in the higher single digits.
Okay.
Hello, Kabir. So, you provided for about 7.2% of the AUM. You've already provided, and 1% is write-off, right? So already 8.2 is what you have already,
but there will be some. You have to understand, not all of that 7% will be available to me for COVID assets, right? There will be some that I'll have to keep on non-COVID assets as well, for example. There will be some on standard assets. So not all of it will be available to me when the time is there to write off against COVID-related disruption assets, right?
So there could be further provisioning in the next few quarters?
No, so as far as Arman and the two-wheeler and MSME, we have more than sufficient provisions. I don't think we are expecting to take any more provisions that are in place. For micro, maybe one more quarter will be required.
And these net NPA numbers that you are reporting, these are, if we include other provisions, then the net NPA number should be close to zero, right? I mean, you reported about...
Yeah, so that was actually my question too when I saw it. The thing is, when you switch to ECL, at every bucket, you have to have a separate provisioning. So when you talk about 90 plus bucket, overall provisioning might be enough, but the 90 plus bucket provisioning will be that 0.6%. Vivek, you have a better way of explaining it.
In terms of the MSME and two-wheeler book, the provisioning would be close to about 70%. So the net NPA would be the balance 30%, which translated to about 1.4% or something. And in terms of the microfinance book, it turned out to be about low single digit in terms of percentage, the net NPA. That is without the Supreme Court dispensation being available. On the Supreme Court dispensations, obviously, I'm sure we, like everybody, I think we would be 100% covered on the gross and net. On the net NPA would be zero.
So just to put it another way, prior to Ind AS ECL, the only provisions that were being created was on 90 plus overdue assets. Under ECL, you also have to provide, of course, a lot lower provisioning, but you also have to provide for, standard assets. You also have to provide for 1 to 30 and 30 to 60. So counting all of those provisions, of course, you'll be covered in the entire NPA, but still, if you just consider the provision against 90 plus assets, you'll get that net NPA figure.
So, and if you look at microfinance, so in January, despite restructuring, we are at 92% collection efficiency. So how much of this impact that, there's still this huge gap is because of the Maharashtra book, and how much would be non-Maharashtra impact? So how much would be the collection efficiency in Maharashtra, for example?
Yeah, so I'll give you December's numbers. We have Gujarat at 95%, MP at 90%, Maharashtra at 85%, Rajasthan at 96%, and UP at about 93%.
And these collection efficiency numbers are including arrears, or this is billing efficiency?
No, I mean this would be include. So you mean like overdue amounts?
Yes.
Yeah, of course. I mean this would include overdue. You'll have to count it somewhere, right? Either in the previous month or in this month. So those would be included, yes.
But some of prepayments and all that will not be included.
So the prepayment will not be included, but what happens is the simple way that we use is that let's say there is a prepayment of 10 rupees on an original demand of 100 rupees. So the original demand is bumped up by 10, so the denominator and numerator both are neutralized.
Okay.
But if you have to use the repayment rate, actually this is a ratio which I don't particularly care for, because there are multiple ways to calculate it. And see, according to your question, so if you are counting arrears, for example, so if I don't count it somewhere, where do either I'll have to change my repayment rate of previous months, or I'll have to count it in this month, right? So honestly, you just have to kind of agree on one methodology and stick to it to make it comparable from month to month.
So I'm just confirming again. So 100 rupees was due this month, and you got 92 rupees. You got 90 rupees for this month and 2 rupees from previous month. You are calculating the collection efficiency as 92%.
Yeah. So you're basically using 92 as the collection amount divided by 102 rupees.
So for active clients, actually, let's say a customer has an installment of 100 rupees and they are overdue 2 installments. So overall, in their current month, there would be 100 rupees due for this month's installment and another 200 rupees due for overdue installments, right? In this example. So for me to collect, I would have to collect, more than 100 rupees to impact as what you are saying. So that will typically not happen. Like a customer is not going to come and give me 300 rupees, right? If they pay me 100 against what is due at 100, then obviously it is recorded against this month's demand. For me to actually collect on the arrears, it would have to be collecting more than 100 from that particular customer.
Okay. Thank you very much. We'll again come back in the queue.
Yeah.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Reminder to the participants, to ask a question, you may press star and 1 now. Anyone who wishes to ask a question may press star and 1. The next question is from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Yeah, look, So, just a couple of questions. One is your liabilities, NBFC as a proportion has declined from 29 to 21. Now, we've been attending a lot of the calls of these NBFCs that you borrow from. You put pictures of some of the NBFCs. So, they seem to be now defocusing on this segment or completely stop lending to, to other NBFCs. So, what are you seeing there? Incrementally, are these NBFCs lending to you, or you have to now look at other sources of funding?
See, to be very honest with you, one saving grace for us is that liquidity has not been an issue. In fact, that we get far more than what we can actually take. So right now we are in a situation where we get to pick and choose. So obviously we will go for the lower kind of lower IRR kind of loans, which are coming from banks and they are coming from DFIs. That's not to say offers from NBFCs are not coming. They are coming, but for now there seems to be other better alternatives or cheaper alternatives rather, I should say.
So then how has the cost of funding moved over the last 3 quarters? What is it now incrementally?
Our cost of borrowing is not higher. It has come down. It's come down.
What is it exactly?
Amit, on a quarterly basis, it will be very difficult to calculate. But what has been seen is that a lot of resets have happened for the MCLRs with the PSU banks. And on a large number of loans which were existing, it has come down by anywhere between 75 to 125 bits. So for the new loans, it is anyway at least 100 bits lower. Plus, as Jendrabhai just pointed out, we've been able to get a lot of low cost funds, in the sense the AFIs like NABARD or SIDBI and Mudra.
So overall, I would say our cost of borrowing would be approximately around 13.25 to 13, somewhere around that neighborhood right now.
Okay. And on the securitization and assignment, that also, it seems that banks are now reluctant to, especially in MFI, to do that. So are you seeing that?
We're seeing a lot of active interest, Amit. To be honest, at every point of time, we have, as Alok pointed out, more active interest than we would probably be willing to take do a drawdown right now. Hence, we have a more situation of where we can pick and choose from the lowest cost of funds maybe.
And any updates on the equity raise?
No updates worth reporting, no.
And also now on the growth front, so microfinance you have now slowly started giving to new customers, and largely till now it has been to existing borrowers who have completed repayment. But on MSME and two-wheeler, you're still sounding quite, that you want to go slow there. While when we look at the collection efficiency numbers, MSME and two-wheelers is where the numbers are quite good versus microfinance.
So we are planning on going a lot faster now. The issue was a lot of the credit bureau data that you were getting was stale, So for me to evaluate a customer, especially for two-wheeler, let's say, a lot of my primary reliance is going on the credit bureau data, right? So what do you do in that case? You up the down payments, you up the underwriting and those kinds of things. The same thing was there with MSME. So a person could come with a completely clean credit bureau report, but you don't know whether he has actually defaulted at some other company or not. So it just required a sort of a more deep dive into the numbers of the customers. But now we are a lot more comfortable, of course, that stale credit bureau data that Jendrabhai was also mentioning, that is getting back online, and companies are, of course, reporting maybe not as much as enthusiastically as they were pre-COVID. Of course, people are still restructuring and things like that. But at least the data available from the credit bureau side is a lot better, right? Yeah, sorry, go ahead.
So are you now starting to lend aggressively in MSME?
I wouldn't call it aggressively, but the numbers are increasing. So our pre-COVID max was about 17 crores. Last month was about 14 crores. This month will probably reach about 15 to 16 crores. So by this month or next month, we should be back on pre-COVID levels.
And can you give a number of what percentage of your MSME customers are already borrowing from someone else, some either MFI bank or anyone else?
I mean, I would really have to pull that out. I don't know it on top of my head.
Okay.
Typically speaking, in the MSME space, almost 30% would be no hits. So 70% would have other loans.
Safely assume that 30% are first-time borrowers. 70 surely have borrowed or have outstanding with somebody else.
Yeah.
And what percentage would be, say, your existing borrowers whom you have now shifted to the MSME book?
Those are few. I mean, less than 5%.
Mm-hmm. Okay. And I think maybe a year back, one of the things that was planned on the growth side was the LAP or a rural LAP that you had mentioned. So, and what's any plans going forward on that?
No, I mean, I think if you recall, we had shelved that for a bit post, different kinds of crises, and of course, we have not taken it off our shelves post-COVID. But this is definitely something that we can explore, starting Q1. We have been exploring, other individual kind of loans in the MFI segment. So these would be the customers that were with you for past 3-4 years, and kind of similar to the MSME, but of course the ticket size would be slightly lower.
Okay. And now, after, both Arman and the industry have taken this COVID hit, and this has come not just a few years after the demonetization hit. So what does it mean for the microfinance business? Does the business model have to change in any fundamental way, or things continue to be the same?
I mean, I don't know, yeah. I mean, that's a very practical and a philosophical question. To a certain extent, there is no good crisis gets wasted in terms of microfinance. So there is always something to learn and improve. I think post demon also, a lot of people shifted towards more cashless disbursements and things of that sort. I think the next big focus for the MFIs will be cashless collections. But that is a challenge which is exponentially harder than cashless disbursements. So already we are putting forth efforts in doing that, switching over to UPI-based payments. The response right now is very limited from the customers, honestly. But we have tried to tie up with many of the payment banks as well, such as Fino Payment Bank, where customers can go and deposit the money at their local merchants, or our FOs themselves can do it. So, I mean, overall, all said and done, even post this crisis, it seems that our customers are definitely resilient. I mean, nobody enjoys seeing numbers like 92-93% repayments. But that means 90% of my people are back to track and they are repaying. And remember, you are dealing with the most vulnerable people. If you and I, we lose our jobs, we can probably pay our EMIs for 3-4 months out of our savings. This is not the case with our customers. If their income stops, then the EMI stop. So overall, I guess my confidence is somewhat boosted that this is, we call demon as the worst case scenario. This is at the expense of using the same terminology exponentially worse than what demon ever was, right? And even then, if you can get away with maybe a year's worth of profit, I would say that this is a resilient sector.
Mm-hmm. But so even now, when we talk to a lot of the other players, larger industry players, be it say Credit Access or G1 or any of the other guys, they are still talking about aggregate credit costs of 5% maximum and not more than that, which puts it in the demon category and not exponentially higher at least. So what is the disconnect while you are saying that this is much, much bigger and the industry, the larger players are saying that similar kind of credit costs as demon?
See, I think if you ask for people's opinions, you are going to get just that, different opinions. I am simply giving my opinion. Ujjivan is, none of us is right or wrong. But to say that this event is, the magnitude of this event is in line with Demon is a little bit out there for me personally. But see, we 4.5% hit on a static pool basis during Demon. So, I really don't think that our losses are going to be limited to 4.5% on a static pool basis. Now, by the time all the provisions are in place, if we grow to a level where, the denominator increases, sure, maybe there might be 4.5, there might be less, there might be more, who knows. Anyway, I mean,
sure.
Collect will continue for, already we have an RO structure similar to what we did with Demon. We're still attempting to recover even 18 to 24 months after the event. So it's not like even if we write it off, we are going to stop attempting to collect money, right? That's not going to happen. We collect for a long time to come.
Okay. And you're saying that even from those 90 plus overdues, many people are coming back after restructuring. So, which probably was not, you were not seeing that kind of recoveries post Demon, maybe. So it seems that there might be a longer repayment cycle for many borrowers.
Exactly. Yeah. In fact, the entire restructuring philosophy is behind that model only. That, given the kind of pandemic situation and wherein it has almost extended to 9 months now, and if you give them a breather, there is definitely a probability that they might want to fall in line over a period of time because, microfinance funding has been their perpetual source of funding. So they would definitely want to fall in line once their incomes, kind of are replenished over a period of time.
Right. So the hard part is in micro is, of course, losing that discipline, right? So you constantly have to be in touch with them. But some of these, at least 1.5 to 2% of our overdue of our customers are nowhere to be found. As in their house is locked and they are what we call absconding in our terms.
Mm-hmm.
Those will be very difficult to recover. I mean, when you can't even find the customer, they are migrating someplace else, or I don't know what exactly the situation is. But so those will be among the 4.5%, which have not started yet because we can't even find them.
Okay. Thank you very much and good luck. Hopefully from next quarter onwards, things will become normal.
Yeah, I think so. I think the overall, my overall goal is that from April 1st, everything, you hit the reset button and everything starts fresh again and hopefully forget that COVID ever happened and really kind of move on from a business perspective.
So just last question, what is the growth you are looking at next year?
Ask me again next phone call. I'm not sure yet. We are working on it. But there's a lot of challenges.
On a statistical basis, what would happen is that 2021 is going to be a slow year in terms of disbursements. So again, do we want to show growth based on what happens in 2021, or should it be almost like a full-blown exercise to see what can be achieved in 2022? It's something maybe another 45 days away. Once we kind of move on from March, things would end.
Maybe around 8 to 10 branches will probably never start disbursements again. Those will be the worst hit areas. So at least maybe it might not start again, or we might not start it for a long time. So that will require us to replace those branches with other dispersing branches. Of course, I'll have to keep the older ones manned, so that will increase operating costs and stuff like that. A lot of consideration there, lot of things to consider. But we are definitely working on it.
Sure. Okay. Good luck. Thank you.
Thank you. The next question is from the line of Siddharth Bhandari from iWest Global. Please go ahead.
Hey, sorry, my questions have all been already asked, so we have nothing to add. Thank you.
Perfect. Thank you. Easy enough for us. Thank you.
Thank you. The next question is from the line of Devashish Negi from Decision. Please go ahead.
Hi, see, COVID is a once in a 100-year kind of black swan event, and you couldn't have done anything about it. And now you're putting all the nuts and bolts so that you provide adequately for this year. And going by the collection trend, it's improving slowly but steadily, which is a good sign. And you're putting all the pivots for next year's growth. Now, my question is from next year's perspective in terms of growth. See, the underpenetrated MFI regions, whatever I know is Maharashtra, Uttar Pradesh, Madhya Pradesh. In these places, what is your plan for opening up branches for next year? And what is the reason of opening up Haryana?
So, see, Haryana was very specific. Specifically, we were thinking about opening in certain areas of Haryana, especially around the UP border. So Western UP for us is performing amazingly. So right now we have about 16 or 17 odd branches in Western UP, and I think about 11 or 12 of them have already reached 100% kind of a repayment rate. So that has been performing quite well. I have a really good team down there. Also, a few people who are highly experienced from Haryana. So it was a good time to expand into Haryana, and it seems that a lot of the other MFIs in the areas that we have opened or are planning to open have fared quite well during COVID as well, as far as the repayments are concerned. So the other places that we are opening it is in Rajasthan. So Rajasthan has also performed very well post-COVID. The repayment rates for us have been 96% for quite some time now. And this was basically Rajasthan was actually one of the first states for us to recover on a 90+ kind of repayment rate post-COVID. So these are the two areas that we are thinking. Now Rajasthan has a lot of scope because we just moved in there last year. So there are a lot of branches that you can open there. Haryana, I believe, will be limited to probably a max of 10 to 15 branches. Other areas are under consideration. So there are definitely a lot of areas in Bihar, especially in the northwestern side, which have performed quite well. Other areas might not have performed too well, so I'm not sure. Gujarat, we are probably every place that we have wanted to open branches, we have opened. Maharashtra, I don't know. I highly doubt that I'm going to open any more branches in Maharashtra for at least another year or so. In MP, we can consider. MP, the primary area that has been impacted is the Jabalpur region. The rest of MP has performed quite okay. So other areas we can consider. Just we'll try to stay away from Jabalpur or any of the impacted areas. Basically, I mean, COVID, you're right, it's a black swan event. Nowadays, I've seen so many black swans that all I see is white swans. But the fact remains that, it also gives you a lot of good data. My prediction is that the customers that have continuously repaid even during the COVID disruptions, I mean, that will lend a lot of confidence to the other lenders, especially people like myself also, right? So it might be feasible to give a higher ticket size to those customers or move them towards more of an individual loan, which is what our thought process is for the individual loan side in the microfinance division.
Look, this is a beautiful business to be in, and COVID has actually distorted all the figures. But before COVID, Arman has been on all parameters has been doing exceptionally well for the last 3 to 5 years. You don't get a business where PAT grows at more than 40%, AUM grows at more than 40%. You have a ROA of 5-6%, ROE of 25-30% consistently. Now, my other question is, earlier the black swan events, whether it's Demon, Lone Weber, LFS crisis, used to happen. This black swan events, the frequency of event has of late, reduced. Earlier it used to be once in maybe 4-5 years. Now it looks like once in every 2 years. So how you prepare yourself for it? Doesn't it make sense you overprovide for such events and assume that ROE is not 30%, maybe 25%, and provide for it a little more than normal?
See, there are definitely policies that you can frame to kind of expect regional level black swan events, which we do, right? So in any district, we don't have more than a 5% portfolio, and in any one branch, if it reaches 5 crore, then we split that branch. So from a risk framework perspective, we definitely take steps to reduce risk from a geographical perspective as much as possible. So if there are certain fires that erupt in certain regions, hopefully that one specific event is not going to impact us too much. But when you talk about a national level event like Demon or a global level event like the present COVID, I really don't see what I could have done different in FY19 or something to really prepare myself, right? I mean, short of taking pandemic insurance, I'm not exactly sure what we could have done differently. But yes, as far as provisioning is concerned, I think you are right that it's probably safe to build up provisioning, let's say from 1% to 2% or something like that. In the MSME, we had already started taking more provision than we needed even before COVID because, there was adequate profits and everything was in place, and maybe it was considered to be a slightly riskier business, although I don't see how given our performance. Yes, definitely once we return back to profitability, that is one thing that we can consider is a higher provisioning. But, against an event like this, when you might have to write off 7-8%, I mean, how much? I cannot keep a 7-8% provisioning on my book, right? That's impossible. I mean, I would have to.
Of course, yeah. COVID is an exception. I'm not talking about COVID. I'm talking about more frequent kind of black swan event. Apart from the COVID, whatever has happened in the last 4-5 years.
So I said this pre-COVID also, and I'm saying it now that even on a pre-COVID, the time of microfinance with a 100% repayment rate is gone. It's no longer there. It was there because everybody was targeting lower hanging fruits, and customers had a different kind of a culture where they were not used to getting easily available credit. Today the culture has changed and credit is readily available, and there is a lot of competition also. When you add all of those things into the mix, it's definitely, even if COVID didn't happen, you could not reasonably expect a zero loan loss kind of a figure. It just wasn't going to happen. So in any case, you were ready to accept maybe 1-1.5% loan loss on the micro book. Going forward, we can probably provide for 2% or something like that, on a steady basis. I don't know.
Last question. Yeah, thanks, Alok. Last question, Alok. Before COVID, if you were to bifurcate the growth of MFI into ticket size and customer count, okay, what would be the split?
Actually, I think that is in our, I forgot what it was, but we have done that. So if you were to split the CAGR between customer growth and ticket size growth, so ticket size growth was, I believe, about 14%, and it was 26% in the client side growth. That is in one of our presentations, if it's not in this one also, or it might be in the IR presentation. It will be on our website, but I'm pretty sure it's 14 and somewhere around 25%. between ticket size and the number of customers. Yeah. Value and volume.
Right. Thanks and all the best for future.
Thank you so much.
Thank you. The next question is from the line of V. Srinath from Bellwether Capital. Please go ahead.
Hi, Alok. Hi, team.
Hi.
Just wanted to get some few maintenance questions out of the way first. In the 5.6% restructured, is this completely for the MFI business, or have we restructured some MSME and two-wheeler customers also?
Not two-wheeler, but that is including MFI and MSME customers.
Okay. But my guess is it will largely be MFI, right?
Yeah, the amount will be largely the MFI.
Yes.
Oh, got it.
On a percentage level, it will be,
in terms of percentage levels in Arman, the restructuring has happened to about 1.98%, while in MFI it would be about 6.5%.
Can you come back again? The 6.5% of the book has been restructured for MSME.
For microfinance.
Okay, sorry, sir. Okay, got it. And this 5.6 minus 3.4, that's DPD 90 restructured is 3.4. So the 2.2% residual are actually paying customers. They are paying their monthly demands.
They are paying customers, but these are customers who have themselves requested some kind of a cut in their EMIs because they are facing hardship for every month. The struggle is there. So they are not paying on the center meeting date, but they might be paying 10 days, 15 days later. Or the FO has assumed, okay, these people can become regularized if the EMIs were cut down. So those are those customers. Those are basically genuine hardship customers who need some break in the EMI amounts.
Got it. So rough to say this, to this 2.2 has no willingness problem. It's a genuine hardship which over a period of time, since they are all essential services, the cash flow should come back, and that's an area which one should not worry too much about, right?
No, I wouldn't worry about the restructured loans which are, sub 90 days DPD ones. Because those are actually paying us. In fact, for us, it amounts to higher interest earned on the customers overall. So I think net impact is okay as far as the balance sheet is concerned.
Perfect. So value at risk in a way is the 4.1 plus the 3.4. That is the 7.5.
Yeah, correct.
Okay, perfect. And in these 18,000 customers who have not paid even one installment, could you kind of give a flavor, like, so you had made a mention to Amit's answer that about 1% of loan book has completely absconded, or just some flavor, or is this largely 18,000 coming from Maharashtra, or is it largely willingness issues, or some broad flavor as to what do you see the problem with these 18,000 customers?
So, I mean, honestly, most of them have been disrupted completely out of their livelihoods, right? A lot of them were in... So just to give you an idea, about 50% of those customers are in Maharashtra. The rest of them are in other states. And I think there is no... Probably the largest ones are the absconding customers, right? But all of them, I would say, are disrupted. We don't really run into a lot of willful defaulters in microfinance. There might be a 1% or so which are willful defaulters, but by far and large, their income has been disrupted.
Got it. But even in Deman, Maharashtra had issues, right? So, what is your take on the state? As in, there's been persistent credit costs. I'm not only talking about you, but at an industry level. Just want to get your feel. Is it one of those states where one should actually kind of, completely avoid?
No, in Maharashtra during Deman, the losses were basically limited to Vidarbha region or Amravati region and those areas, which is like the eastern part of Maharashtra. So That we made a call that we are never going to go into those areas to begin with. Other areas which saw loss were like the south of Maharashtra and stuff, which was, Sangli area and places like that. So anyway, we are not in those areas. Basically, until June of 2019, Maharashtra was the best performing state that I had. They always made their targets and the loan losses were one of the lowest in that state. So this is the kind of business where fortunes turn fast, right? Let me give you another example. During demonetization, one of the worst impacts was in Gujarat, in the milk belt.
Yes. Yeah.
So that has been performing beautifully right now. In fact, almost in those regions which were impacted during demon, I almost have a 98% repayment rate in those areas because, people continue to sell milk. So there was no issues there. So
not a repayment continue from that belt actually.
See, the gurus of the industry will make predictions, and hindsight is always 20/20. But lot of these things are very much unpredictable. It's only when you are knee deep that can you do a kind of a hindsight analysis of what went wrong. But it's very difficult to predict these kinds of things that Maharashtra will turn bad or is good or anything like that, right?
So it's basically in that belt the income destruction was much higher is how I should be reading it. It's not a cultural thing.
It's not a cultural thing. In Maharashtra also the issue was that the lockdowns and stuff continued for a much longer time. And initially there was a lot of political issues as well. Now that has gone away now, but the damage was done to an extent, right? So that's another reason why we are facing a lot of issue in Maharashtra. But I think there is a improvement, like in the last 2 to 3 months, the repayment rate has...
The repayment has been improving the highest in Maharashtra, obviously because of the low denominator.
Yeah.
But, over a period of time, it's consistently been improving.
Yeah. So, for example, in November, it was about 80% repayment rate. It went to about 85% in January. So, we're still getting improvements there.
Perfect. On a question that had come out earlier in the previous Concall also, you had spoken about the stale data in the credit bureaus. So just want to understand, is this bureau data issue largely because of the Supreme Court order, and until that is solved, this bureau is going to be a problem, or is it
Yeah, so that is one of the issues. Earlier on, the issue was moratorium, right? So nobody was really reporting anything. Post-moratorium, people were still kind of trying to fix their systems and stuff like that. So a lot of the reporting was not being done by many of the companies on time. So I'm not saying it was a complete 100% issue, but definitely a 50-60% of the data was not being updated correctly. So if you look at like the CIBIL report, for example, it gives you what date the report was last updated. So that's what I mean by stale. The last update would have been, if I check it in September, the last update might have been in February or something like that. But now today also, while the reporting might be happening, I'm not sure what the individual policies are for the different banks or the different customers. Different banks or different NBFCs. Are they reporting NPA as it is in the credit bureaus, or are they reporting them 90-day DPD but not reporting them as NPA, or are people continuing to do what they were doing before? It's really anybody's guess today. It's quite chaotic, to be honest. So there is no consistent methodology for reporting on credit bureaus vis-a-vis the Supreme Court order.
Got it. So basically, as the bureau data becomes better, then that's when you want to look at external customers. So large part of the growth or the disbursements now will be targeted towards internal customers because you have the data with you.
Yeah. So nowadays it's much better. People have started reporting. So the NPA customers might be different, but if I see a customer's data has been updated and there are like 3 or 4 different lenders that they might be dealing with, and all of them are okay and are on time, that's fine. I can lend them money. What I was saying that post-August when we started disbursements, the initial 2-3 months we were concentrating mostly only on our own customers, right? Because there were enough of those that had matured also, so we could service them. And second part was we were very busy collecting also. So, renewing your old customers is a lot easier than, going and finding fresh customers, for example. So there were a lot of advantages in just renewing your own customers at that time. But today that is not the case. Of course, the weightage is still there, but we are servicing customers now as well. And that weightage will increase as every month as time goes on.
Got it. A couple of more questions. One question is on the 7 crore write-off. Just want to understand how does our write-off policy work? As in, are we writing off the DPD 0 accounts who have not paid anything till now? Just want some clarity on that. That would be great.
Generally, the write-offs would be driven by the DPDs and the customers which have not paid to us for the last 6 months or so, and are falling in the 90 DPD plus.
Yeah, so this 7 crore is mostly the people that we were having problems with even pre-COVID. And post-COVID, they have not paid anything. So it was basically best to take them off the books.
And additionally, a very marginal number of cases where we've not been able to just maybe find the customer at all, or we finally discovered that they have not
gone to a different state altogether.
So on those selective customers, we've already taken a call.
Perfect. And the last one out would be on the MSME segment. I think the collection numbers, the NPA or the restructuring, everything has been a positive. Of course, it could also be like last time you had said that geographically you're not present in Maharashtra, and maybe that is why. But generally want to get a feel of that particular business. Would it be the time for us in the next cycle to kind of scale it ahead of microfinance, or kind of significantly disproportionately scale that business given the very positive trends we've had in this cycle? Just want your very broad view.
Definitely there. Trust me, I would like nothing more than to expand in MSME. So we have already have plans in place to open up more branches. In fact, we have already opened up a couple of branches this month itself. The only issue is it's not as easy as it is and maybe I use the term easy loosely, but in terms of difficulty to expand in MSME, it's not higher than in microfinance, right? Because as I told you, you have to pick the specific regions. Once you open a branch, it takes a while for them to get in the groove of things. There are certain occupations that happen in certain areas which, the field team needs to get acquainted with. So it's not as, I would say it's not as easy as is in microfinance, where you have a kind of a, McDonald's type product where, it's quite easy to find customers and to underwrite them and to disperse the money. MSME is a little bit more trickier to expand quickly.
Perfect. And you just used the word individual loans in MFI. Could you kind of address that opportunity also broadly?
Right. So this is what a lot of people are doing, and this was actually what the MSME division was actually envisaged as in 2017, until it kind of took a life of its own, trying to target the microfinance plus kind of people who are slightly higher in their life cycles. But still you had this set of customers who have been with us for 3 cycles, 4 cycles, 5 cycles. And these are customers who have repaid everything on time during COVID as well. So there is no, I would say my confidence to lend them on an individual basis, a slightly higher ticket size, let's say 50,000, 60,000 rupees, becomes a lot easier. So those are the kind of people that we are targeting.
So this opportunity would be like, say, 15,000, 20,000, 30,000 out of the 3 lakh plus clients. Some just kind of very broad understanding of who have survived these 3 cycles.
We are just putting the softwares and stuff in place right now. The goal is to start dispersing from next month in March. Really, it will be a pilot for a good 6 months. So I don't want to set out any expectations. But I don't foresee it being more than 10 to 15% of our overall book.
Got it.
Thanks,
Alok. Thanks a lot, and I would like to thank your team for transparent disclosure policies also. Thanks.
No, you're welcome. Thank you so much.
Thank you. The next question is from the line of Vinay Ambekar, an individual investor. Please go ahead.
Hello.
Yeah, hi.
Hi, good evening. You just mentioned, Alok, that you see a possible provision requirement continuing for this quarter also, that is Q4. Since we are already halfway through, can you indicate what is the level of provision that you envisage could come up? Could it be similar to what happened in Q3, which was roughly about 2% of the book, or could it be lower or something?
I don't know. I mean, it's a little early to tell you, to be honest with you. But in microfinance, we are at about 6% right now. If I say, we want to bump it up to 8% or 8.5% or something along those lines, then yes, about 2.5% seems reasonable to me at this point.
Okay, so this is 2.5% of the microfinance book, not because when I calculated 15 crore on
book, yes. I think for as far as MSME is concerned, we are okay with it, and we are probably over provisioned at this point.
Right. So in absolute amounts, actually it could be lower than 15 crore.
On a console basis, yes.
Yeah. Okay. And second point, just I don't know, I got dropped off in between, so I don't know if this was addressed. But when we were discussing collection efficiency, a lot of other MFIs are giving data on, like-to-like basis. So, for example, what was the amount due in the month of January versus out of that, how much was collected? So, excluding arrears. And I believe that we have this number earlier in the earlier presentations and earlier calls. So, it was a bit surprising to see that now we are saying that it includes arrears also. Can you explain that a little?
Vinay, just to understand.
I would say everybody would be including arrears in their thing, as far as all the people that I talk to. Because otherwise, where do you put it? I mean, do you put it next month, in the previous month, do you retrospective? So let's say if somebody was overdue in October, and I'm reporting January figures to you, and that October overdue comes back to me. Do I retrospectively go back and change October's figures, or do I put it in Jan? So where should I put it? And as far as my people are concerned, see, I cannot have one policy for my investors and another policy for the bankers and a third policy for my employees. So that will be chaotic. I want my people on the ground level to collect arrears, and when their incentives and everything are tied to repayment rates, obviously you would want to include that. I don't know.
What happens is, say this month's demand also includes this month's, even the cases which are in arrears have demand this month, right?
Yeah.
So, applying arrears in terms of application of funds is a different thing. But in terms of what was the current month's demand, even including the overdue customers, against that, what have we collected is the thing that which a large number of the customer, people in the sector are reporting that way, and I think.
Yeah, and it's not going to be a very large number. See, as I told I don't know if Amit asked this question or not, but as I mentioned earlier, for me to count it in arrears, the customer would have to pay this month's installment and something more than that to cover his overdue, right? So that's not going to happen. And when we talk about arrears, of course, we are talking about on a post-moratorium basis. Because moratorium is obviously not going to be included in this. So that is something different. If somebody wants to pay that is considered an advance or a prepayment, and in that case, the denominator will change of the repayment. So that will be a net-off effect. We are simply talking about, I thought that would, I mean, for me, it's an encouraging sign if the arrears are coming in, right? That means that the customers are getting a lot better.
No doubt, no doubt. No, only from consistency of understanding. So if I can just put a number to it, for example, if the EMI is 5,000, okay, and for 2 EMIs he has not paid, so the amount which is due from the borrower becomes 10,000. So is 10,000 included in the denominator?
No. Let me put it this way. If a person has a 5,000 rupees EMI and he's two EMIs overdue, so his total demand of this month will be 5,000 rupees. That will be the denominator. And if I collected 5,000 rupees, so that would be 100%. Whatever he did not pay was deducted from the previous month repayment rate, right? If he pays me 10,000 rupees this month, then obviously 10,000 will be included, because I don't want to go back and change it, right? I cannot go back to October or November and change the repayment rate retrospectively. So where would I account for that extra 5,000 that the customer paid?
Sure. So if he pays any amount more than 5,000, then will you include 10,000 in the denominator? Or no?
No, not in the case of arrears.
Because in the case of arrears, Vinay, when this denominator was discussed, we were talking about
advances.
Repayment and advance or prepayment.
Okay. So if I were to exclude arrears, what would that be? 1%, 2% on a rough, broad number?
Roughly, probably not more than 1 or 1.5%, 2% maybe at the most. It's not a very large amount.
Not a material amount. Okay.
It's not going to throw off the figures by a huge amount.
Okay. That's a good point. Thank you so much. All the best. We have been through really tough times, and I hope these end soon. All the best.
Thank you.
Thank you. The next question is from the line of Devashish Negi from Digital. Please go ahead.
So this new regulatory framework, puts NBFC, MFI on the same level playing field with banks and SFBs. Now, is this a small thing or is it a big thing, given that competitive intensity will slightly reduce and credit discipline will improve? How you see it from a sector perspective and Arman perspective?
No, from a microfinance perspective, I think that, I don't know what is considered big or small, but I would say it is definitely something that is worthwhile to, or on an operational basis, it is probably a large thing here. And this is something that we were pushing for quite a while. I think if you heard me talk about the CRL, the Code of Responsible Lending, that is what our SRO MFIN was trying to get everybody to sign, right, including the Bandhans and the SFBs of the world. Because there was really a regulatory arbitrage, right? So we were, as MFIs, we were restricted that, you cannot be a third lender and you would have to keep the overall loan size below 1 lakh or 1,25,000 or whatever it is. So there were all these terms and conditions, but there was no other terms for like the SFBs or the banks in general or the non-MFI NBFCs. So they could come in and kind of do anything they wanted. Now that's fine, but if you want to be conservative like I do, let's say I lend some customer 40,000 rupees. What is stopping a bank from coming in and giving that same customer, 1.5 lakh rupees? So overall, my risk increases even though the person who came in after me, decided to take the additional risk on the customer. So the hope is that with the common code, everybody is at least, I know what to expect, right? I know, as a microfinance customer, this guy cannot get lent more than 1,25,000 rupees or whatever framework that RBI comes up with. So at least as far as the MFIs are concerned, I think we were trying to get this done for a while. The RBI took its time, but of course eventually agreed with us. And even before this came out, we had launched the CRL, which a lot of the practitioners signed also, to their credit, including the SSL. Because we are all, of course, swimming in the same pool. So obviously we would want the client protected. We want our own portfolios protected against kind of roguish behavior by some of the practitioners.
If this comes with immediate effect?
No. I mean, they have just proposed it right now. I don't know when the guidelines will be.
I mean, it's still, if I can put it, it's still at the white paper level.
Yeah.
When it is being discussed, and let's see.
Well, now that they have announced it will come eventually. When it will come, I don't. It's okay. I mean, it's not an emergency kind of a thing that we need it right away. But at least it's forthcoming.
Thanks, Alok. Very detailed presentation as usual, and thanks to you and your team for a very open and transparent conference call and answering all the questions so candidly. Thank you.
No, thank you so much. I try really candid wherever I can. Maybe I appear as very pessimistic.
Sorry to interrupt. The line of the management got disconnected. Please stay connected while we reconnect them. Ladies and gentlemen, thank you for patiently holding. The management line is reconnected back. Thank you, and over to you.
Yeah, apologies. I'm so sorry. I guess I got disconnected, but
No, yeah.
So yeah, as I was, thank you so much. We appreciate it. I think if there's any more questions, I'll answer. Otherwise, we can probably end the call.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Jignesh Shia from Emkay Global for closing comments.
Yeah, hello. Am I audible?
Yes, you are.
Yes.
Yeah. Thanks a lot, Alok and Chandraman and Vivek for the detailed update and all. And thank all the best for the coming quarters and all. And thanks everybody for attending the call. We will end the call here. Thank you very much.
Thank you. Thank you, everyone.